The FTX withdrawals start today, and this could inject up to $16 billion into the Bitcoin market. Not all at once, but bit by bit. Let's take a look at what's behind this. Additionally, there is now a proposal to introduce bit bonds to make the US more attractive and to repay US debt levels by issuing government bonds that are linked to Bitcoin. This is an ultra-innovative idea. If this takes hold, it could actually help manage the serious debt problem in the USA. Not just by buying Bitcoin, but by tying Bitcoin together with government bonds and issuing bit bonds. This is massive, and we need to look at what's behind it, because this will catapult the Bitcoin price upwards. At the same time, this could make the USA a new superpower. So, just expanding the power of the USA even further. Before we look at that, we need to focus on the Department of Government Efficiency and Elon Musk, because something is being released here that can further limit the national debt in the USA. This means from the Department of Government Efficiency account. The Treasury Access Symbol is an identification code that links a Treasury payment with a budget item. For the federal government, the THS field for payments amounting to approximately $4.7 trillion was optional and was often left blank, making traceability almost impossible. Since Saturday, this is now a mandatory field that provides better insight into where the money actually goes. So now we simply have a new tracker in the USA that tracks government spending. It potentially existed before, but it was optional to provide, and no one did it. And now Elon Musk and the Department of Government Efficiency have introduced it as mandatory, not optional. And this leads to better control of government spending. And thus, less money will be funneled into pointless objects or projects because it now has to be specified where the money is going. And that's the big problem that you often see right now, whether it's with USAID or the IRS or whatever, that funds are going to positions that are unbelievable, where you think, hey, that doesn't make any sense. Funds are going to places that no longer exist or to people who are no longer alive, and all sorts of such stories. And this is all being uncovered now. With this mandatory field that is now being implemented, there is simply the assurance that less money will be wasted, which will also further strengthen the dollar, make bonds more attractive on the global market, and then interest rates will fall again, making it easier to incur debt, and it will also have effects on Bitcoin. But we'll get to the bit bonds later, because the concept that has been introduced here is very, very ingenious. For managing the national debt in the USA, simultaneously boosting Bitcoin and making the USA an absolute supernation. But just briefly about the new mandatory field that has now been introduced in the USA. Elon Musk says here that a significant improvement in the Treasury's payment integrity is going live. This was a joint effort by the Department of Government Efficiency, the Federal Reserve, and the US Treasury. So you can see here that they are all working together and somehow intertwined, and now we have to wait and see if Fort Knox will be inspected, if the Federal Reserve will be checked, and if a complete clean slate will be made here. But now let's move on to FTX, because we also have massive funds flowing into Bitcoin here. It's very important to note that these funds will not flow into Bitcoin all at once, nor will the entire amount be invested in Bitcoin. A portion will flow into cryptocurrencies, some might continue to be held in cash or saved, or then swapped into some other lifestyle tokens. We have a total amount of 16 billion here, some say 18 billion, there are different figures, and the whole thing starts here on February 18th, so today. And first, the repayments are going back to people who have claims in US dollars, and it's hard to estimate how much money will flow into Bitcoin now, and it won't come all at once. But you can certainly assume that some liquidity will flow into Bitcoin. This means cash will be settled, paid out, and then some people who have been following the whole thing with FTX for a very long time have probably become hardcore hodlers by now. Then maybe half or a quarter or so of the money will flow into Bitcoin. Let it be maybe 8 billion or 5 billion or something like that, and it is definitely additional buying pressure that will further boost the Bitcoin price. But you won't really notice it because it will flow into Bitcoin so slowly, over a longer period, over time, 2 months, 3 months, half a year, maybe a whole year, nobody knows. And then you will notice relatively little of it suddenly. That means this is also always very, very important to understand. When I always say something here, something happens. Some funds flow into Bitcoin, central banks lower the interest rates, now QE is happening. Yesterday I made a video about QE and people said, nothing is happening, the Bitcoin price is even going down. Yes, these are always very, very long-term price drivers. FTX doesn't mean that payouts come here, everything flows into Bitcoin tomorrow, and then there's the Valhalla candle. No, that's not how it works. Instead, the money flows in slowly, and sometimes you don't really notice it. I mean, there are always situations where suddenly a lot of money flows in very quickly. If we have any emergency situations now, like during the Corona time when a massive amount of money was suddenly pumped in. or if MicroStrategy makes excessively large Bitcoin purchases, or if some sovereign wealth fund makes an excessively large Bitcoin purchase, then you definitely notice it. But most of the time, we have these gradual effects that stretch over several months, and the Bitcoin price sometimes doesn't react to them at all. But over a longer period, over 3 or 4 months, we do see a positive effect here. And now something truly fascinating has happened, because in the USA we have the big debt problem, where the USA probably can never pay back the debt. And now there was the consideration, even Donald Trump inquired whether it might be possible to pay back the debt with Bitcoin. Now something fascinating has actually happened, as Bitbonds have been proposed here, and it was also posted under a post by the Department of Government Efficiency. There, they said, hey, check this out, Bitbonds, this is the absolute hit with this one could pay off debts here in the USA. I'll tell you right away, it's not that easy to pay off debts in the USA, but this is at least an approach, at least an idea of how it could potentially be possible here. And at the same time, it would be a massive price driver for Bitcoin because we would see a massive demand for Bitcoin. However, this will only happen if the USA really opens up massively to Bitcoin. Probably the basic condition for such Bitbonds here is a strategic Bitcoin reserve. Preston Pitch also made a very interesting video on this where he tags various people such as Cynthia Loomis, Howard Lutnick, David Sachs, and many others who have some say in the Treasury here in the USA. And he explains why this is a really good idea to create a free and open market demand for the issuance of long-term government bonds. This means it's about bringing down long-term interest rates. That's exactly what Elon Musk said as well. Elon Musk said that the Department of Government Efficiency will ensure that the annual bonds here come down massively, making it easier to finance real estate, lowering credit card interest rates, and generally reducing potential interest rates, making refinancing easier. The USA has a huge problem. This year, I believe it's 9 trillion, or 7 trillion, and 7 or 9 trillion, something like that, which the USA needs to refinance this year. This means these are loans that are expiring, where a new loan simply needs to be taken out. This means taking on new debt to essentially pay off or refinance the old debt. So paying off isn't entirely accurate, but you refinance it. And now there's the issue that if 9 trillion need to be refinanced, you have to make sure to somehow get favorable interest rates. And that's also why, for example, many people say, okay, the US needs to significantly lower interest rates to simply refinance things here. I don't know if they will refinance everything with long-term bonds or if they will first use short-term bonds to bridge the gap and then perhaps push through the large refinancing packages when the interest rates are down again. But in any case, the US needs to ensure that long-term interest rates go down and the Fed can decide on the short-term rates. And Elon Musk has already said, hey, we might not be able to influence short-term interest rates, but we can massively influence long-term interest rates. However, a white paper has now emerged from Bitbonds, and Bitbonds could completely change the entire game here. They might achieve what the Department of Government Efficiency probably cannot, namely bringing interest rates down to a level where it becomes really attractive for the US to take on new debt and refinance at very, very favorable conditions, and especially to significantly increase the demand for US government bonds. If this demand for US government bonds increases significantly, the price of Bitcoin will also rise significantly. I'll explain to you exactly why now. Because with these Bitbonds, Bitcoin is always integrated. This means that when such a Bitbond is issued, it always includes 1% Bitcoin. This means you have a US government bond, you issue it, but when you issue a government bond for US dollars or something like that, you don't put all the euros into the government bond. Instead, 1% Bitcoin is also purchased. There is also a white paper, which I will show you now. And here, there's an example that goes through how such a Bitbond works. And it's probably similar to a volcano bond in El Salvador. I don't quite remember exactly how they work, but it's likely something similar. This means the US Treasury issues $100 billion in 10-year Bitbonds. 1% of the $100 billion is used to purchase Bitcoin. Assuming the Bitcoin price is US dollars at the time of the auction, then Bitcoin is purchased. These Bitcoins are transferred to the bondholders at maturity after 10 years, in addition to the repayment of the bond's principal. And this is particularly interesting if we assume that Bitcoin is bought here for US dollars, and then somehow 10 years later, the Bitbond is paid back. Bitcoin is now at $1 million, then you have taken a tenfold increase here. This means you tend to pay 10% less of the bond because you also have the Bitcoin gains here. This means you have a massive advantage here as you have an additional security in the form of Bitcoin. Additionally, you have the price increase, potentially needing to pay back less, or on the other hand, you simply have more returns. And the reason why you do something like this, you can see here, it's very, very simple. This is probably one of the most important charts that clearly explains why Bitbonds are essential to manage the US debt. We see here in the blue line how the US debt keeps increasing. Here you can see the compound annual growth rate of 8% per year, which is a very, very good return. But the problem is this is not a return you earn, but rather debt that you have to pay off more and more. You can see the blue line keeps going higher and higher, and below in the red line, we see the demand for US Treasury bonds. And this is crazy because the demand for US Treasury bonds is not really increasing. Instead, we have rather stagnant demand here. This means, on one hand, the national debt has been rising since 2008, but the demand for US Treasury bonds is rather stagnant, and depending on the period you look at, it is even declining. And what needs to be done now to get the national debt budget under control is to bring the red line up and the blue line down. And this is definitely possible with BIT bonds because by offering BIT bonds, the attractiveness of US Treasury bonds in the USA will increase again, or at least that is the premise of BIT bonds, that their attractiveness will rise. Then more people will buy these BIT bonds, and in the end, you have something similar to the MicroStrategy yields. You can essentially offer a similar program, creating a product similar to MicroStrategy. With MicroStrategy, they were able to massively drive up the demand for their bonds, but with MicroStrategy, it's all on a corporate level, whereas in the USA, this will happen on a state level. This means that it's not an exact one-to-one copy of MicroStrategy, but something similar, which include convertible bonds or other available options. There are various offerings, some of which are similar to BIT bonds, while others differ slightly from BIT bonds, and according to the white paper, this could even bring long-term interest rates down to 0%. So the premise is that the government bonds would be so attractive if they had the absolute highest yield in the market. On one hand, you would have the greatest security because the USA backs it, and on the other hand, a decentralized network supports it. If the whole thing is then backed by a strategic Bitcoin reserve, you would probably have even more bulletproofness in the entire setup. Of course, the condition is always that Bitcoin rises. If Bitcoin were to fall massively here, if we somehow drift into a 10-year bear market or something like that, then the whole setup wouldn't work out. But if we just continue with the gains, it doesn't even have to be a 50% compound annual growth rate like in recent years. It could even be 20%, maybe 30% or something like that. So even with diminishing returns, the BIT bonds would still work here. The US could massively increase its international attractiveness. Long-term interest rates would go down significantly, making national debt refinancing much easier, which would boost the economy because it would be easier to incur debt and borrow money. On the other hand, it would strengthen confidence in the US dollar and pump up the US dollar's dominance. Other currencies would likely depreciate against the US dollar, the euro, and so on, because they might not have such mechanisms, as they might be missing out on this. Potentially, the EU could do it as well, but I don't think the euro or the eurozone is that innovative in this regard. And every Bitcoin holder would also have an advantage here, because with every long-term US government bond issued, a portion of Bitcoin would also be purchased, driving the Bitcoin price up. It's super interesting. I'm not saying it's the ultimate solution that could completely pay off national debts or anything like that. Maybe it's completely far-fetched. I still find it an interesting concept that's currently being discussed here in the USA. To be honest, there's not yet any major political support or anything like that, but that could still change. First, the strategic Bitcoin reserve needs to be established, then the Bitcoin bonds can come, and then we can see what happens next. Feel free to let me know in the comments below what you think about it, whether you find it freaky or if you can actually go along with it. Guys, if you still want to buy Bitcoin, I'll put a link below to 21 Bitcoin, where you can buy Bitcoin easily, safely, and simply. With the code Bitcoin Hotel, you can get up to 20% off the fees when buying Bitcoin. See you until then. Peace out.